Income verification, documenting your earnings for mortgage approval. Income verification is a critical component of the mortgage application process. Lenders need to confirm that you have stable, sufficient income to make your monthly mortgage payments. The documentation required varies depending on your employment type and income sources. For W-2 employees, the verification process is relatively straightforward. You'll need to provide your two most recent pay stubs showing year-to-date earnings. Lenders will also require your W-2 forms from the past 2 years to verify your employment history and income stability. Additionally, lenders will contact your employer directly to verify your current employment status and salary. Some lenders may also request 2 years of federal tax returns, especially if you have additional income sources or complex financial situations. Self-employed borrowers face more extensive documentation requirements. You must provide 2 years of personal tax returns, including all schedules. Business tax returns for the past 2 years are also required, whether you operate as a sole proprietor, partnership, or corporation. A year-to-date profit and loss statement is necessary to show current business performance, and you'll need to provide business bank statements, typically for the most recent 2 to 3 months. Lenders will carefully analyze these documents to calculate your average monthly income and assess the stability of your business. For 1099 contractors, the documentation falls somewhere between W-2 employees and fully self-employed individuals. You'll need 2 years of personal tax returns showing your 1099 income. Provide copies of recent 1099 forms from your clients or employers. A year-to-date profit and loss statement helps demonstrate current earnings, and bank statements showing regular deposits from your contract work support your income claims. Lenders will average your income over the 2-year period and may apply a stability factor if your income has been declining. Understanding the different types of acceptable income is important. Base salary or hourly wages are the most straightforward and easiest to verify. Bonus income can be counted if you have a 2-year history of receiving bonuses. Commission income is acceptable, but will be averaged over time. Overtime pay can be included if it's been consistent for at least 2 years. Rental income from investment properties can be counted, typically at 75% of the gross rent. Social Security, pension, and disability income are all acceptable sources, and alimony or child support can be counted if you can document that it will continue for at least 3 years. However, some income sources cannot be used for mortgage qualification. Cash income that isn't reported on tax returns cannot be verified and won't count. Temporary or seasonal income that isn't expected to continue is excluded. Income from illegal activities obviously cannot be used, and gifts or one-time windfalls don't represent ongoing earning capacity. To prepare for income verification, gather all necessary documents well in advance of your application. Ensure your tax returns are filed and up to date. If you're self-employed, maintain clean and organized financial records. Be prepared to explain any gaps in employment or significant income fluctuations, and avoid making major job changes during the mortgage process, as this can complicate verification and potentially delay or derail your approval. In conclusion, thorough income verification protects both you and the lender. By understanding what documentation you'll need and preparing it in advance, you can streamline the mortgage process and avoid delays. Maintain good financial records, report all income properly, and be transparent with your lender about your employment and income situation.